Introduction. Blackberry, BB, Limited is a global cybersecurity and software company that has undergone a significant transformation from being a smartphone manufacturer to a software-focused enterprise. With a focus on cybersecurity, enterprise software, and the Internet of Things, IoT, BlackBerry's shift reflects its attempt to capitalize on growing sectors within the technology industry. Investors who are looking to assess the future of BlackBerry stock, BB, need to consider several factors: the company's financial health, recent performance, cash flow, and growth prospects. This analysis will cover each of these aspects to provide a comprehensive overview of BlackBerry's current position and whether it represents a good investment opportunity. Company overview. Founded in 1984, BlackBerry initially gained recognition as a leading mobile phone manufacturer, known for its secure communication features. However, with the rise of touchscreen smartphones and fierce competition from Apple and Android, BlackBerry's market share dwindled. In response, the company shifted its strategy to focus on enterprise solutions, cybersecurity, and software products, particularly for the automotive, financial, and healthcare sectors. BlackBerry's core product offerings today include: 1. BlackBerry Cybersecurity Solutions. The company offers endpoint security solutions for enterprises, which protect devices and networks. 2. BlackBerry IoT Platform, providing solutions for connected vehicles and other IoT devices. 3. Enterprise Software Solutions, a suite of products designed to enhance productivity, manage security, and provide analytics for businesses. This pivot to software and services has seen BlackBerry move away from consumer-facing products and into the more lucrative and stable world of B2B, business-to-business, software solutions. Stock performance. BlackBerry's stock has been volatile in recent years, largely due to the uncertainty surrounding the company's transition from hardware to software. In the past, its shares have been subject to short-term speculation and retail investor interest, which has led to significant price fluctuations. However, as the company continues to focus on its software business, it may offer long-term investors better stability. Over the past year, BlackBerry's stock price has experienced periods of sharp decline and growth, which is indicative of the speculative environment in which it operates. However, the overall trend is stabilizing, reflecting the market's recognition of BlackBerry's transformation and its future potential in cybersecurity and IoT. Revenue breakdown. BlackBerry's revenue streams have largely shifted from hardware to software. In the last fiscal year, the company reported revenue of $1.03 billion, a modest increase compared to previous years. The major components of BlackBerry's revenue include: 1. Software and services. This includes revenues from cybersecurity solutions, enterprise services, and IoT platforms. 1. As of the most recent quarter, this segment accounted for over 70% of the company's total revenue. 2. Licensing. BlackBerry earns licensing income from its patents and software technologies, including royalties from its security technologies and other companies' products. One of the key metrics to assess the long-term growth of BlackBerry is its recurring revenue model. With an increasing focus on subscription-based services, BlackBerry aims to create more predictable and stable revenue flows, which is a favorable development for investors. Profitability. BlackBerry's profitability has improved since its pivot to software, but the company still faces challenges due to its historical reliance on hardware and the competitive nature of the cybersecurity market. In recent quarters, BlackBerry has reported mixed results in terms of operating income. However, it has made significant strides in reducing operating losses. The company continues to invest heavily in research and development, R&D, as it focuses on building out its cybersecurity and IoT platforms. This R&D investment is necessary to maintain a competitive edge in the technology space, but it also impacts profitability in the short term. Here are some key profitability metrics. 1. Gross margin. BlackBerry has seen its gross margin improve in recent years, as the software business, which carries higher margins, now accounts for a larger proportion of total revenue. 2. Operating expenses. BlackBerry has worked to reduce its operating expenses, focusing on streamlining operations and eliminating unprofitable divisions. 2. However, ongoing investment in R&D and sales and marketing continues to pressure operating margins. 3. Net income. The company has reported both profits and losses in different quarters, but there's a general trend toward improving net income as it transitions to higher margin, recurring revenue streams. Cash flow analysis. A critical component of assessing BlackBerry's investment potential is analyzing its cash flow. A company's cash flow is an indicator of its financial health, operational efficiency, and ability to fund its growth initiatives without relying on external financing. Below is a breakdown of BlackBerry's cash flow. 1. Operating cash flow. BlackBerry's operating cash flow has been inconsistent in recent quarters. 1. However, the transition to software services has begun to generate positive cash flow, especially as the company builds a recurring revenue model. 1. For example, in the last fiscal year, BlackBerry generated $70 million in operating cash flow. 1. The increase is largely attributed to the steady growth in subscription-based software services. 2. Free cash flow. BlackBerry's free cash flow has been more volatile. 2. At times, the company has generated negative free cash flow due to investments in R&D, acquisitions, and restructuring. 2. For instance, BlackBerry's capital expenditures, CapEx, related to infrastructure and expansion initiatives have sometimes outstripped the cash it generates from operations. 2. However, the company has been taking steps to better align its capital expenditures with its cash-generating capacity. 3. Cash and cash equivalents. BlackBerry's balance sheet indicates that the company holds a solid cash position. 3. As of the most recent quarter, BlackBerry reported approximately $700 million in cash and cash equivalents. 3. This is a positive sign, as it suggests the company has sufficient liquidity to navigate economic downturns, fund ongoing operations, and invest in future growth. 4. Debt levels. BlackBerry's debt is relatively manageable compared to many other tech companies, and the company has been working to reduce its overall debt burden. 4. In recent quarters, BlackBerry has focused on maintaining a low level of debt and has been diligent in its efforts to balance its financing needs with its overall strategy of long-term growth. Risks. Despite its positive developments, BlackBerry faces several risks. 1. Competition in cybersecurity. The cybersecurity industry is highly competitive, with several well-established players like Palo Alto Networks, CrowdStrike, and Check Point Software. 1. BlackBerry will need to continue innovating to remain competitive. 2. Market volatility. BlackBerry's stock has been prone to speculative trading, and its price may fluctuate based on market sentiment rather than fundamental performance. 3. Execution risk. The company's transformation from hardware to software is still a work in progress. 3. While the outlook is positive, execution risks remain a concern, especially if BlackBerry is unable to achieve growth targets in its software divisions. 4. Regulatory risks. Operating in multiple countries exposes BlackBerry to various regulatory environments. 4. Changes in cybersecurity regulations or trade policies could impact its business. Valuation. As of the latest available data, BlackBerry's stock is trading at approximately $6.50 per share. This translates to a price-to-sales (P/S) ratio of around 3x, which is relatively low compared to other high-growth tech stocks, making BlackBerry potentially undervalued considering its strong focus on cybersecurity and enterprise software. Looking at the company's potential for growth in the cybersecurity and IoT markets, its current valuation could be appealing for long-term investors. Moreover, as the company continues to generate more predictable and stable revenue through subscriptions, the stock may appreciate over time. Buy rating. Based on BlackBerry's improving financial health, positive growth prospects in cybersecurity and IoT, and relatively attractive valuation, I am assigning a buy rating to BlackBerry stock. The company's focus on recurring software revenue, reduced reliance on hardware, and strong cash position all contribute to a promising future. While the stock may face volatility in the short term due to market sentiment and competition, BlackBerry's long-term transformation and strategic investments should position the company for success in the growing cybersecurity and IoT markets. Investors should, however, remain mindful of the execution risks and market fluctuations, but overall, BlackBerry presents a compelling growth opportunity at its current valuation. Conclusion: BlackBerry has made substantial strides in shifting its business model from hardware to software, and the company's current trajectory suggests long-term growth potential. The focus on cybersecurity and IoT offers substantial opportunities for expansion in the future, especially as these sectors continue to grow. Given the company's improving financials, stable cash flow, and reasonable valuation, BlackBerry's stock appears to be a solid investment for those seeking exposure to the technology sector. Rating: Buy.